Hi, my name is Heidi Kakko. I'm an investor and a mentor. I have been investing in early-stage startups for the last 15 years. Today, we are going to talk about the most fascinating startup topic, and it is money, and how to get closer to money and funding, whether it's the customer money or investors' money. In order to get closer to the money, you need financials, the financial projections and metrics. And the metrics are meant to prove that you actually make progress. So what do you need? Basically, you need a set of your industry-specific key metrics. For example, if you run an e-commerce platform, it is very easy. First, you need to get the visitors onto your website. Then you have to convert those visitors into the paying customers, and then you have to be sure that they come often and buy a lot. So it is easy. Basically, you need the metrics to manage your company, plan your activities, and to fundraise. And definitely, the metrics are not only for the investors, but definitely for you. So, what do you need to know? First, and these are also the questions that the investors are going to ask from you. First, how do you generate revenues? How much do you grow? What are your costs? How much do you need the money for it? And how will you reach the break-even? Knowing the metrics basically means that you understand your market. As a startup team, you have to know a lot about the market. What is the size of the market and the growth of the market, whether there is a declining or upward trend? What will be your target market share and how fast will you grow in that market? Number of customers in a defined focus area is definitely something you will be asked for. What is the pricing strategy and the structure? How do you bill your customers? What drives value and what drives the costs? And probably one of the most important issues also, how to reach profitability. Now we come to the classics. Almost 15 years ago, Dave McClure, the founder of 500 Startups, has built up the basic model for Pirate metrics. It is about the customer lifestyle or conversion behavior. First, how to acquire the customers, then how to activate them, then how to retain your customers, then how to go viral, how to get referrals, and the fifth one, how to generate the revenues. The most important thing about those 5 areas is that in order to improve, you have to measure your metrics. You have to know what to measure. What are those most important key metrics you as the startup team have to focus on? These are operational key performance indicators. First, number of active users. You have to know where do they come from and how long do they stay and whether they do convert into the paying customers. You have to know how much does it cost for you to acquire one customer and how much that customer would generate the revenues. You have to know what is the lifetime value of the customer, how long they will pay your bills. And that is the most important to understand unit economics. That is what the investors also ask for. How much is your customer acquisition cost compared to your customer's lifetime value? Besides the operational key metrics, there are a lot of financial key metrics that you need to know and the investors ask for. You may have heard about MRR, that is monthly recurring revenue, something that will occur if your customers pay your bills on a monthly basis. The investors definitely also ask for the monthly or weekly growth rates. What are those numbers and how is the trend in the past and in the future? The burn rate and the runway are something also that you have to keep an eye on. Burn rate means how much money do you burn in a month. And the runway is how many months do you still have for the money to be burnt. So, as you understood, the investors care for growth and also future profitability. So, what to present to investors? You definitely have to select your key metrics, the key performance indicators that prove your progress and that are characteristics for your industry. You have to show the history, your traction, what you have already achieved, but also you have to show the future. You have to build the future model based on the metrics. And then it is very easy to build also the financial projections to be based on the metrics. And build those financial projections for the next 12 to 18 months. What to keep in mind? Building a startup is hard, but it is more constructive and easy if you have the right tools. Analytics and the key metrics are the best tool for you. This is the tool for operational management and also for preparing for fundraising. As you may know, the best money comes from the customer, the client. That proves that your product or service actually creates some value for your potential customers. And also the investors love the customer money the most. As if it is a business, it has to earn profits eventually. That was the basics of key startup metrics. Now you know you have to measure in order to improve. Get your tools right and start to measure.